We're talking market hotspots. Want to turn our attention now to the industrial sector, including such giants as 3M. Now, three people with knowledge of the matter are telling Bloomberg that 3M's chief executive, George Buckley, is expected to make an early exit next year. His contract wasn't up until 2012, in February of 2012. Well, here with his top selections of stocks, Nick Heymann from Sterne Agee Leach. Nick is among the most accurate analysts on multiple stocks, including Bombardier, Cooper Industries, as well as Tyco. Nick, good to have you with us on Bloomberg.
Hey, good to see you, Tim.
So what's the deal with George Buckley and...
Just got off the phone.
You just got off the phone
in the company, and basically somebody's crossed their wires. It is February 2012.
Right.
He'll be 65.
Right.
65 is the retirement age. They have 3 to 4 candidates internally that they're looking to select the right one. And quite honestly, they've had a good year in 2010.
But so the idea that George Buckley, the chief executive of 3M, at least according to your information, is not stepping down early.
Not at all. No.
So no one has to. That's so you're breaking some news for us here. What was? Can you just tell us who the source was? It a board member?
2 different sources, internally as well as the board.
An internal as well as an external source on 3M. George Buckley not stepping down early as the chief executive.
No.
All right. So what kind of company is George Buckley the head of right now? Because 3M is not the same 3M as you just think about Post-it notes and adhesives. This has become a research and development giant.
Research and development is an international, growth story, particularly for emerging markets. And it's also one that clearly, right now, having the lumps in this fourth quarter with regards to consumer electronics. But they have changed the way they're creating value for their consumer electronics customers. So they're no longer just providing product, they're actually providing the intelligence and the value added and functionality, which gives them a lot better opportunity for top line growth. And this is certainly controversial at a time when people are concerned about further slowing perhaps the economy in Europe, the US. There's a debate on that goes both ways. But I think that certainly the top line is going to prove to be much better than expected, 10 to 15% growth on the top line. I think that the tax rate probably be less egregious than they've laid out here at 30%. And I think that additionally, we'll find that the pension is not as much of a headwind. That'll be the case for a lot of companies, obviously, with 10-year rates coming up pretty sharply here recently.
Now, when you look at 3M, if you're an iPad user, you're already a customer of 3M to a certain extent. You just don't know it.
And you'll be a bigger user and customer of 3M when they go to the next generation. And they have a lot of security features in it. And that's one of the strategies, whether it's with Apple, whether it's with the different television manufacturers. You're trying to increase content per unit to reduce the reliance on the variability of the end market demand for the actual products themselves. And you're trying to find the highest brand franchise that can pay up earlier for that enhanced functionality. Apple obviously is a leading brand. Samsung and LG are very leading brands, so that you can then seed 3D TV with no glasses. When you have no glasses, 3D TV will probably be something people want.
Well, it looks pretty good sitting here looking at you in 3D. What is 3M's strategy overseas? Because that's also a critical component.
3M strategies overseas is pretty simple. Take and broaden out the number of brands so that you can in turn capture market share, which is much more reflective of what you hold in developed economies in Japan, Western Europe, North America, 40 to 60% share. Today, most of their shares are 5 to 15%, typically sold under 3M. Now they're broadening it out. They've localized the products with local labs, so you can actually meet, not reinvent, but meet the needs with existing products that are modified for the local markets and beat out, if you will, the rival of your competitors from Europe, Asia, North America, because you can fund it aggressively. You've got a lot of cash in this company, and you've got an exceptional balance sheet with net cash, no debt.
All right, so $86, $87 a share. You like the stock?
We think it's $110 stock in a year.
$110 in 12 months?
Yeah.
All right, and the news really is, at least today, you are speaking to an inside source and an external source, that George Buckley, the chief executive of 3M, not planning to leave the company early. He's sticking to that February 2012.
He'll be in the saddle.
That was the contract.
A year from today, getting ready at that point, having probably announced at the end of 2011 the successor. To be able to make that transition.
Nick, can you just step back a little bit, and where are we in this cycle? Because a lot of these big industrial companies that you cover, whether it's United Technologies, ITT, or indeed 3M, they are always viewed as being very cyclical, and it usually counts on people opening up the spigot somewhere and spending some money.
Right.
What's the view right now in terms of what corporations are doing?
We're pretty late. okay, in the cycle. So we would think that there's certainly recovery eventually out there for North American commercial construction. Commercial aerospace is certainly starting to turn. We see engineering and construction. The big spending for LNG facilities is a big driver. Flow, over at Tyco is now seeing significant benefits from this. So it's pretty late for cyclical, and at this point, certainly global growth, new product, development are all critical factors.
All right, so if you want something that is a little bit safer in your mind, do you look at a Tyco?
Yeah, we're looking for basically probably more turmoil and volatility with FX, with interest rates, obviously pretty volatile here in the last few months, but that could really kick up some storm. And so you're looking at what we call deep keel stocks. Deep keel stocks have a very high degree of recurring revenue. As a result, they have very nominal cyclical recovery at the beginning, but in the case of Tyco, 45% is monthly recurring revenue. So that's something that's going to sail through, even if the seas get a little choppy in terms of rates going up or the dollar plunging or something like that.
Some big macro thing happening.
Macro thing happening. So,
so what about the ADT business, the safety business, the protection business at Tyco?
It's really looking pretty interesting. They come out with a new interactive, security called Pulse.
Right.
And it's started off very well. This year, they'll be spending money to roll this out through distributors, but it really has the opportunity to take as much as a third of the market and lift substantially the revenue per subscriber, per customer. And so that really can change the dynamics, particularly in 12 and beyond for ADT. ADT now is also starting along with fire to benefit and be pulled through on flow. So if somebody needs to be able to put money into an LNG facility, needs big valves.
Yeah, liquefied natural gas. Sure.
Yeah, well, there's a fire hazard, so they're going to need some fire protection. And 70 to 80% of Tyco's now flow business, they think they can actually get some business for their fire. So that's a really nice pull through. They got a very aggressive buyback program going on now. First one paid with cash from divestiture, and the rest from cash flow. So we think things are finally, for Ed Breen, after 8+ years, finally the tailwinds, the headwinds are now tailwinds. And you've got, a lot of good fundamental upturn in flow right now, and eventually out there, North American residential, construction can come back and help, ADT, help certainly fire, and help temp, which they just recently partially divested.
Now, what about the possibility that we're going to get this new engine? I want to shift your attention now to Bombardier, the new C series, and Bombardier. I know they make trains, high-speed rail. Right. But let's focus on the aircraft.
Yeah, the aircraft, they're going to get the orders. This is the most disruptive, engine, when you put it with the C series. The engine, of course, made by Pratt & Whitney Technologies. Probably since the jet aircraft showed up in the 50s and was very disruptive to turboprops. So it's been a massive focus of Airbus to try to join the forward progress of this commercial launch by launching this NEO, the new engine option to be able to re-engine their 320 and 321s. And we think, when things are this disruptive, there's certainly some initial, hurdles that might be higher than not, but I think that this is a 20% differential in terms of trip cost, 15% in seat mile cost, and that's when it enters service in 2014 versus the best in class, and that's got 50% upside. So it could be threefold, 30%, versus 910, which is the best in class. I sense a
battle coming here somehow.
I think it's going to be an interesting arm wrestling.
All right, we're going to have to follow it with you. I want to thank you very much, Nick Heymann, coming to us from Sterne Agee Leach, sharing your thoughts about industrial stocks.
Thanks, Pimm.
Thanks as always.